Welcome out to another Trading Justice podcast. This is Mark Justice. I'm joined with my illustrious brother, Matt. I love calling him illustrious. Talk a little chaos in the markets. We got tariff chaos. We got AI disruption chaos. We're going to break down the fact from the headlines, see what is noise, see what might have a little more sustainability. It's going to be a really fascinating podcast, breaking down a lot of data, a lot of things impacting the market. We're going to talk about Tom Lee and alchemy. Along with stock it or drop it as well. It's gonna be a fun podcast.
If that's what you have to do to be a negative bias on gold, is saying alchemy's coming.
It's gonna be
like,
a price.
I kind of feel like my call out that AI is coming for all jobs 2 years ago kind of feels a little bit more accurate than alchemy is going to end gold.
And that's real. He literally said it was a black swan, but we'll get into that in a minute. For now, I want to just say real quick, listen, Trading Justice podcast is sponsored by Tackle Trading, fabulous pro community, a fantastic top-rated, number one rated on Trustpilot trading educational platform. We take care of our members at Tackle Trading. We take care of them. We give them education, market analysis, daily interaction, fantastic newsletter.
The best newsletter in the business.
Come give us a try. Sign up for that 50-day free trial. See what it's all about. Matthew, Justice, how are you, my brother?
Doing fantastic. Excited to be here for another edition of the pod. And, Mark, I think you nailed it in the open. The chaos. There's a lot of chaos out there.
There just is.
There's just a lot of information in the market. And sometimes, especially given the fact that we're dealing with this broad range neutrality where we have these radical ups and downs in the market without the market actually doing anything from a sustainable perspective, that has grown a little bit frustrating. And as the market grows into this neutrality, it allows a lot of people a lot of time to have some discussions on, what about this in the market? And what about this in the market? And what about this? And hypothetically that, and hypothetically this. And, trying to, in a world built on quote unquote fake news, it's kind of hard to decipher the real from the insignificant, I would say, in the market right now, because there's just a lot of information in the market right now. And that's in an environment where we don't have a lot of earnings this week. We don't have a lot of economics this week that are going to be driving catalyst from the market. Don't get me wrong, NVIDIA's kind of like
there's a little
100 different stocks reporting all simultaneously. So there is that one. But my point is there's a lot of information in the market. And some of the times, and I think right now is one of those times, it's hard to decipher what's real and what's not.
Yeah, absolutely. And we're going to break that down. We'll talk, we'll talk about tariffs in our next segment after the market skyline, give a full update, kind of discern, break down what is news, what is noise. But I want to start off, Matt. There was, one of the things that hit the market today, a little underreported by mainstream news. I saw Market Watch made a comment, but very commented on social media, was
flying everywhere.
Yeah, and so it's one of these like missed by mainstream media, picked up by social media, was a research, and I don't even, I hesitate to call it a research piece. It was more of an opinion piece.
Yeah, I have it as like a speculation newsletter,
like more theory,
a hypothetical scenario in the future.
Yeah. And it was put out by Citrini Research. I'm not familiar with Citrini Research, but they sure did make waves on social media today and got a lot of eyeballs, got a lot of discussion. And certainly I think, and you put me onto this, played into the volatility in certain areas of the market. We saw, and we've seen this for 2 weeks, Matt. We've seen the AI disruption areas, which, started off with software, has spread a little bit to like real estate, some aspects of real estate into financial services.
Definitely financial services.
And we saw the AI disruption areas just get shellacked today, shellacked today. And I think a lot of that could be contributed to this paper that was making headlines. Matt, what was in the paper? And then I got a few follow-ups for you. So what was this paper all about?
Well, and again, this is just an opinion piece, and they even the authors of the article even say that at the very beginning. They're like, okay, what follows is a quote unquote scenario, not a prediction. And so what they were trying to do,
which of course means that some people took it as absolute fact. The
I,
second.
I would say 90% of the people reading this article over
Oh
the
yeah, that must
weekend
be true.
absolutely took this as fact. So they posted this article yesterday, and it really caught fire in social media, and specifically in finance Twitter, where everybody, like, nobody was talking about tariffs yesterday, Mark, and today, like, everybody in the world's talking about tariffs and the Supreme Court decision and whatnot. And that's what I was expecting to have a conversation, in the market this week was, all right, the Supreme Court just ruled on tariffs. Let's have that conversation. Well, that's not what everybody in financial media and specifically on social media wanted to talk about. It was more about this article that was put out by Citrini, which basically was labeled the 2028 Global Intelligence Crisis. And what it talked about was not that AI was bad. No, that AI was really good and it had
Too
this
good.
massive impact. And there was too much intelligence, and that too much intelligence led to a couple really, really nasty things. And so it really kind of the premise of the article is what if people like me are right on the AI build out and the impact on our society? And so they kind of looked at it through that lens, and they looked at it through the lens of, all right, fast forward to 2028, and we're looking at that environment, and you're dealing with over 10% unemployment, reported unemployment, and you're dealing with all these other things, and the market's down 38%. And it really, what it did is it spooked a fear that I think is building with the general populace. And I feel like there was just like people made way too much about this article as it was a prediction and not just a scenario to think about. And so I think it really started dominating people's minds today because number one, we've dealt with the market specifically in technology that has not been a great environment for months and months and months. And so like there's already concern in the AI trade. There's already a healthy dose of concern on the financial services industry. There's already a ton of concern on software, which basically this opinion piece basically annihilates software. And so if there's a few takeaways from the article. Number one, AI is not just a productivity story, but it's a demand shock risk that everybody's talking about it from the supply perspective, but it also eliminates demand over time as jobs get lost and incomes go down. And, they really took it from that negative side of the equation. Another major takeaway from the article, and I want to get your take on this one, they call it ghost GDP, that
Yeah, I
where
saw that phrase.
I kind of like the phrase, to be honest, because we all know that if the U.S. economy is cooking at 4%, like we're in straight up growth narratives. But they said, well, you can cook at 4%, but does that mean we're actually seeing a GDP
Yeah,
impact to
because
everybody out there?
yeah, well, and I had, I didn't read the whole thing, but I skimmed the
It's a
thing, and the
very,
Ghost
very
GDP.
lengthy article.
Yeah, yeah, it's a busy Monday. I had to work.
Yeah.
I had to work today. But what they say is basically, AI output might help keep GDP up, but it doesn't fuel consumer spending, and that was kind of the key to the ghost GDP. And so it was a clever phrase. It's one of those catchy phrases that
Well, I think it
might
catches
catch on.
on.
Yeah, I mean it's
Because last quarter we grew at 4%. This quarter we're growing at about 1.4%. But even in that 4% growth, we've been describing it as a K trade economy,
yeah,
basically. And
and
this puts that K trade economy on steroids, basically, is,
yes,
is what I would
because
suggest.
because everybody knows it's not a 4% for everyone economy. It's
No.
not like this
Does
is
that 4% GDP equate to 70% of the workforce seeing
no,
3.5%
we're
wage
seeing
growth?
inequality expand, not
Exactly.
contract.
We're
You
seeing
know,
the rich get richer, the poor get poorer, and the death of the middle class so far is what we're seeing in that. So I actually thought the way of describing the ghost GDP was due to AI was actually fairly creative, and I didn't disagree with it. Another one was AI disruption spreads from software to the entire intermediate economy, which is basically how they describe as anything that has to do with human time. If a
yeah.
human does it, it's at risk, basically. What were your thoughts on that?
Yeah, no, and this is, I think, what gets at the heart of the spook, thing. I think there were, I mean, they had things in there like, the S&P goes down 38% in this scenario, kind of a classic. And I disagreed with
I
that.
disagree with the conclusion, by the way. I
Yeah,
don't.
that the conclusion, because
There's
I
one
thought that,
major flaw that they have in this that I think needs to be discussed.
but yeah, we'll get to that. I was going to fast forward to that flaw, and get that. But, the the spreading of the disruption, because like anybody that's been following the market for the last couple of weeks knows the software, which has continued into financial services, which
Mhm.
is the market is already on edge. And so here you have a piece that catches wildfire on social media that goes right at the heart of those industries,
Well, and
right?
also
Right.
it spooked a lot of those fears that we have about AI in general, Mark, just, based on where it is in the build out.
I mean, the only thing missing was like the Terminator robots exterminating human beings from the piece, right? We should have a
Uh,
Terminator 3 clip right now, just, the little machines gunning
mhm.
people down.
So basically, the premise of this article is one that I think really, and we all know what social media loves the most. They love their bear porn. There's no doubt about that. And they ran with this article a lot. And I was a little bit surprised that it had as big of an impact in the financial world today. But Mark, would you agree that there were more people talking about this article than the tariff announcement on
Yeah,
Friday?
outside the mainstream media. Mainstream media was very, even secondary, but they're
Very
not, but
tariff oriented, but
very
like
tariff, because it's easy to describe. Oh, market down and there was tariff news, right? It was a lazy thing, but yeah, no, I mean, you look at XLF. XLF had a pronounced move down today, right?
yeah.
Right, like pronounced. That's a big, massive red candle, right? That's not tariff related, right? Software's breakdown, not tariff related, right? And so the heart of the industries that have been part of the
Specifically
disruption,
those two sectors which were targeted in
which
that
were
article.
targeted in the article itself. And
Yeah.
so we saw that in the article. And so I think when you look at it, right, you have, well, I think it had an
Well, and I don't
absolute
know how
impact.
much tariffs impact software in general either. Like,
Yeah, yeah, no, I mean, and so like your big areas that got beat up were, I think, you can directly link it to the Citrini
yeah.
article, not tariffs itself, which which we'll
Well, and
discuss in a second.
honestly, I know it had an impact today on the intraday side of the equation, but to me, that like the biggest flaw in the article, in my opinion, is they also assume that demand destruction occurs here due to the labor implosion, and that demand destruction will cause prices to go down and profit margins to basically go to zero, and that would force more layoffs and more
Yeah,
layoffs
it
and
was
more
very
layoffs.
classic recession,
I
like
I
2000,
get
like,
it, but don't you have to, if you're going to be calling for an AI revolution, don't you have to actually take a little bit more time to think about the impact down the road than just looking at it historically, how it's behaved, since we're in a completely different
yeah,
part of
I
that
thought it was a
conversation?
huge
Well, and
lazy
not only
flaw of the
that, but
article.
Mark, we're seeing like impacts on labor. Like, this is not surprising to anybody that listens to this podcast. We've been calling for that for a while now. That's going to happen. It's going to happen even more. Governor Waller today just came out and basically stated that he's being told by a bunch of CEOs that more big time layoffs are coming from a AI specific perspective. Their assumption is AI also completely destroys demand. Not only does it take care of the supply side, but it destroys the demand. And as that destroys demand, profit margins come down to zero. Mark, in this latest earnings season, okay, I can just go based on what's happening, the truth of the market, because again, I think the article is absolutely fascinating, even though I do disagree with the end conclusion and takeaway. I felt like it was a fascinating article. I felt like definitely a must read to understand kind of that ultimate bear conclusion argument. But one of the biggest flaws I did see was the anticipation that demand destruction is going to happen and lead to contraction in profit margins. But in this latest quarter, we just saw a record profit margin out of the S&P 500 coming in at 13.2%. And so we're just not seeing that. We're seeing it on labor. We're seeing it on the concern. We know it's here. We know the impact. But one thing that I've felt for a long time was that the efficiency argument was going to play out a little bit more early on than the labor market argument. And I still maintain that because we have seen more efficiency out of AI, not less. We've seen higher profit margins, not less. And so that I do think the takeaway of demand destruction is assuming one thing that I don't take into account. They're assuming that the government's not going to have anything to say about demand destruction. What's your thoughts on that?
Yeah, no, I mean, and these are the
Like
leap
the
of
government's
logic.
just going to sit back and watch labor implode to 10.2% and not do anything about it?
And one of the things, in fact, they said that policies would lag. One of the the
I agree with
the
that.
key thing, policies would lag, social unrest will follow,
I agree with
right?
that.
You know, and that, and they kind of left this, well, that's kind of just where it will stand. That there's no eventual, intersection of government
But
and the
doesn't
problem.
government policy come out of that
Of
unrest?
course it does, because if it
That's
doesn't, you don't get reelected. We're in a populist time
exactly.
period, right? And so
So,
I thought that was a big, like, in reaching their like dire conclusions, like
well,
they,
and
they they missed those steps.
I think if you nail down the authors, they would say UBI is a conclusion here.
It
And
has to be.
I do think that's where they lead is the ultimately technology is the death of economic capitalism is the ultimate conclusion here. And what does the governments around the world that are capitalistic nature, how do they offset that? Because under capitalism, you never would ever experience an environment where the supply side is taken care of. And so I found the article
Yeah.
fascinating, but I do disagree with the end conclusion. Although I don't disagree with the journey we're going to take to get there. I do
Yeah.
think the policy will lag. It's one of the complaints I've had with our government is that we're getting behind the eight ball on the AI conversation. We're not even having the conversation from a macro perspective yet. And so I certainly agree with that. But I just, I have to see that happen in earnings on the profit margin side of it. If profit margins give, then I would agree with demand destruction, but we haven't seen profit margins
We
give
haven't
at all.
even seen it. All right. And if you're out there listening to this and like, well, how can a research paper, send these areas down so dramatically? Matt, pull up IBM. This market is so sensitive to any headline involving disruption. There was a tweet put out, I think, by Anthropic or whatever, basically saying that COBOL modernization, that AI can now do that. Now I didn't know what COBOL was. I didn't know how it related to IBM, but apparently is some of this like archaic code that IBM kind of specializes in the kind of the maintenance
Mhm.
of it. And
Kind of the CRM argument that you don't need Salesforce and what they produce because all software. The argument that comes out of the article is basically all software is flawed, and AI will replace all software that is currently flawed. And there's some of that I agree with. There's some
yeah,
I disagree with, but
it
yeah.
doesn't take much to move a stock or an area right now in this disruptive, like AI is going to disrupt things, right? If it
Listen,
catches.
if the market was not already spooked going into neutrality, I think that article would have came and gone and nobody would have read it. But I do think it tugged on some of
Oh,
the
4 months ago,
emotional.
heck, 2 months ago, nobody, no,
Yeah,
nobody
I
comments on
do
it.
think it's one of those emotional things that obviously our society is getting concerned about. We're seeing headlines, even the Fed's getting concerned about the labor side of the equation. And then this article just kind of painted that ultimate negative landscape on how the build out would go, and I think it sparked a lot of the fear in the market. I don't think this is a lasting impact. From this article
No, it is
perspective,
not.
I think it had an impact today. I think we move on
Although
tomorrow.
Ghost GDP might be around. That's catchy.
Oh no, no, there's things in the article that are consistent that are going to be here. I'm saying the end conclusion and the
Yes.
way it's impacting the markets, but it was a fascinating article, and I'd strongly recommend reading it.
No, absolutely. Listen, I want to fire through a couple areas real quick, just on the technicals in general,
Yeah.
Matt. In the newsletter, you talked about the quiet shift inside a range. Had a lot of chaos today, headlines, but we stuck the landing. Highlight this, kind of range within a range, what you were referring to, and then talk to me about something you said on the lounge today about the Dow closing below the 50 and what that means to you.
Well, I think there's two things technically here, and I'll get into both of those. But the S&P is fighting for a lower level of resistance, and that's what I was kind of talking about. The range within a range is that you have this broad-based neutrality right now in the market, and that goes from the low point right around 67.75 up to the top point around 70.43. And so you got about a 250 point range where the market is basically up and down and up and down and up and down. But over the course of the last week, you also developed a little bit of an inside range within the backdrop of that bigger range. And that's what I was talking about, an inside pattern here. And that was really kind of working off the double bottom at 68.50 and the double top at 69.20 to 69.30. And even today was really volatile. But basically, the on the cash open here today on Monday, obviously, people will be watching this throughout the week, but you'll kind of see that range play out. Is on the cash open, it went straight up into that 69.30 level, which I wrote about last Friday. And I said, guys, this is a level of resistance we have to keep an eye on. Well, cash open Monday, right up to 69.30 and right back down. And then all of a sudden, once that rejection took over, it got underneath the orb and it screamed down to the lower level. And there was a lot of volatility. So it actually breached that 89.50 level. But Mark, I was looking at this market all day long, and I'm going to tell you right now, it danced at 68.50 all day long, and then officially gets back up above that level coming into the close. And so we're really dealing with kind of two ranges within the S&P 500. And ultimately, I don't think until we're either breaking 69.75 or we're breaking 7K, I kind of feel like this neutrality is more of a sector conversation. But regarding the Dow Jones, what I'll say is this. When the S&P 500 broke trend and structure of that trend, it has been a chop, 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 chop conversation ever since. That happened when you broke the pattern. When you broke support and the pattern simultaneously, it created a lot of chop. That happened today on the Dow Jones, in my opinion, where and it's less about this trend line and more about the 50 period moving average. But the market was
Pam
kissing
Bundy
up.
put the top in. We
Yeah,
joked about it last week.
Pam Bondi put the top in, and I do think there's only one person to blame on that, and that would be Pam Bondi. But you now see the market breaking that structure, very similar to the triangle pattern it broke on the ES. Well, what's followed that? We after we broke the triangle on the ES, we followed 3-4 weeks of nothing but broad-based neutrality, lack of consistency, absolutely everywhere. Does the Dow Jones follow suit there? And why that's important to me is I've described the market and specifically in the newsletter, but in tackle content as you can't just look at one index today and be like, oh, okay, this is the general barometer of the market. Not when there's two dominant trades in the market. You have the AI trade, which is the epicenter of the negativity in the market right now, and then you have the QE trade. Well, the QE trade, as represented by the Dow Jones, as represented by RSP, that showed a little bit of weakness here today. And so the Dow Jones broke structure. The RSP came down into a support level. That's fighting for that support level. You're also fighting for certain trend lines when you're looking at the overall RSP. And this is on the backs of a little bit of a lack of momentum, too. And so I've described the QE trade as late stage trends with the anticipation of one more leg. I'm not sure you can anticipate that leg now in the QE trade, given the fact that we just broke structure on the Dow Jones, And when you break structure like that, you have to shift from slightly bullish, fighting a bullish pattern to now similar to the S&P, broad-based neutrality. And so I would say the Dow Jones broke structure today. And this technician, like I saw it on the ES. When the ES did it, it became more of an intraday conversation, became more of a day trader's conversation. Now that the Dow Jones has done the exact same thing, just 3, 4 weeks later, I'd say a little bit of the same thing. I'd be a little bit more cautious on the cyclical trade right now until we see a little bit of a better development than a break of support.
Yeah, thank you. And and now we're going to have a little double dose of Tom Lee. Uh, but before we get to the video, something else Tom Lee said this last week was we have NVIDIA earnings come up. It's coming up Wednesday after the bell. Obviously, big, huge event. And, Lee was arguing that earnings, the NVIDIA could renew confidence in the AI theme and basically help propel the breakout.
Oh,
And
thanks, Tom.
I'm like, and I disagreed with it on the surface when I first heard it. Like, the things weighing on the market, like what's Nvidia going to tell us? Now, not for semiconductors, it's obviously not for Nvidia. Earnings are probably going to be awesome, but some of the worries in the market, AI disruption, CapEx spend, AI, Nvidia could have the best earnings report in the world, and it's not going to answer those questions, is it?
It's not going to answer the questions on the efficiency of the AI build out. No, no. Um, could it spark a catalyst in the AI trade? I would say yes,
Just to
it
say yes.
could, because we are talking NVIDIA here. And Mark, a lot of the other AI conversations aren't real. They're based on fear and speculation of what may happen at some point down the road. But to me, yeah, I do think NVIDIA can spark a catalyst here. Does it put a bottom in everything that ills the market? No. Would it put a bottom in financial services if they come out and beat? I don't believe so. I do believe that's a little bit of a different conversation. Nvidia is, I also think Nvidia is it's hard to say Nvidia is going to represent everything the same way it once did. Nvidia is one of the three companies in the market that get a penny from every sell on AI. That's Taiwan Semiconductor, that's Nvidia, and that's ASML. And so ASML, top of the market problems. Nvidia, top of the market problems, even though it's been neutral for the better part of 6 months now. Taiwan Semiconductor, top of the market problems. You look at semiconductors in general. Nvidia doesn't have to fix anything in semiconductors.
Nope.
Semiconductors have been really, really good. It's can they help put a bottom in software? I don't know. I don't know. If their guidance report is good enough, can that spark something? Maybe, but to me, it's not. I don't think if you're relying on NVIDIA to spark that in software, I don't know. I think it's far more about the level software is at. I mean, you're at the pandemic low point in software. You just breached the 200 weekly. Can that form up a head and shoulders formation and give us beautiful reversal formations? That's what I'm more interested in because even if Nvidia does spark the bottom in the market, right, in the AI trade, does that mean automatically we're going to be screaming bullish patterns over the course of the next couple of weeks? No, we're in a bearish environment on software right now. We're in a bearish environment on the totality of the AI trade right now. And so it could be a catalyst that sparks the reversals that we talk about over the next 2 to 3 weeks. But no, if you're anchoring on Nvidia to put in a low for the entire marketplace, I don't know if Nvidia has that broad of shoulders.
Yeah, it once did. I don't know if it does anymore. I think it's a
Well, it,
different.
it once did when they were beating by 100%, and EPS guidance was 100% up. And yeah, like those are easy. We're well past that. The market's pretty efficient on Nvidia's earnings report. For example, I got him as a slight beat and most likely within 4 to 5% on the beat rate on EPS, less than the average market. I think it all relies on guidance and what they say on the guidance side of the equation. So for me, it's going to be a guidance story more than anything.
Yeah. Listen, one thing that put in a bottom for itself was gold recently. Just absolutely just tremendous price action following the volatility from a couple weeks ago. Uh, you know, one thing that I highlighted in the newsletter this weekend is that, every time that you had a red candle, you didn't have follow through, right? And that's led to a breakout of short-term resistance. Pretty technical pattern, isn't it?
Yeah, it's what we describe affectionately as the King's bed pattern at Tackle Trading. It confirmed that King's bed on Friday, saw the continuation on Monday. I think gold's looking really, really good here. I think we end this week talking 5,400 at some point this week. And so it's just a matter of how do you strategically play it. But yeah, I think you got your signal. It's just a matter of what you want to do about it.
Yeah, no. And now one person that wanted to kind of rain on gold's parade a little bit was Mr. Tom Lee. And let's play this video clip. There's a
Well,
lot to.
it set it up, but like,
All right, let's say so. Basically, Tom Lee here is talking about the black swans, and if you're
because I
unfamiliar
haven't
with
heard this interview yet.
if you're unfamiliar with black swans, it's the things that can come out of nowhere to disrupt a market, right? And so here are some things Tom Lee says could hypothetically happen that could be a black swan for gold.
Okay, so Tom Lee is showing what concerns he has on gold.
Yes.
I'm assuming these concerns also lead to him pumping Bitcoin at some point.
No,
but...
eventually, yes.
Okay.
Tom Lee, well-known
All right.
but
So
that's not in
let's
this
play
clip.
and let's hear what old Tom Lee has to say.
There's a couple what I call black swan risks to gold. One is there's a million times more gold underground than above ground today.
Wait, hold on.
And so if gold gets
Wait a second. Did we just break some news that there's more gold in the dirt than there is above the dirt?
Yes.
Okay, fantastic. I just wanted to make sure we're on the same page.
Too expensive. Like literally, Mag 7 is just going to get into the gold mining business, right? Because like you might as well just dig for gold. It's more valuable than anything. The second is gold is all extraterrestrial. I learned that at the Perth Mint, which is one of the few places that assays and makes gold bars. So SpaceX might do a mission to Mars and then run into a gold asteroid. And Elon.
Wait a sec. Elon's not going to Mars right now.
But he might.
But
and
he's not.
along the way, he might find a gold asteroid.
I just want to be clear, though. Does Tom Lee know Elon's plan is no longer going to Mars?
But he might, or someone might, and they might find a gold asteroid.
Okay. All right. Thanks, Tom.
Musk, if he, it's international. I mean, he would own all the gold. He would become the new central bank, and that gold should be, 100 billion ounces.
I can't believe they're taking this serious.
Correct. And the third is, of course, alchemy. Because look, if someone has discovered a way to knock an atom off lead to make it gold, they won't tell anybody. And there's just a whole bunch of gold supply coming. And there's a couple what I call black swan.
Okay, there. It's recapping. So to recap, there's a lot of gold under the ground. Someone might find a gold asteroid floating
I'm
out
assuming if we played this further on point one, he's talking about robots going
Yes, he is talking about robots going to the ocean.
Does Tom Lee know most of that gold is in the inner core that we cannot get to even with robotics?
But it's a black swan.
The technology does not exist.
But there might be a gold asteroid, Matt.
Okay, I just want to make sure that okay, his three scenarios for the negativity in black swan and gold is one, Elon creates the robots that dig all under the ocean.
And then Mag 7 just becomes
Mag 7 just becomes the gold miners. Like, okay, so that's number one. And number two would be Elon. He might be on Twitter too much if his entire gold premise is built around Elon Musk. Like that's a little weird to me, to be perfectly honest with you. So Elon might develop robots to dig down to the inner core of the earth to mine out all the gold. That's number one.
Yep.
Number two would be Elon might go to Mars and become the biggest central bank owner of all gold because
Because he
he
finds
gets
a
the
gold asteroid.
asteroid,
Because there's a gold
right?
asteroid floating out there.
And three is some dude that you don't know about might have already created alchemy to reduce an atom and change the periodic table.
Yep.
This is real analysis out of Tom Lee.
This is real analysis.
This is not a fake AI video.
The same guy who will find any excuse to
I
buy
have no
Bitcoin
clue
or
why anybody would listen to Tom Lee. I really don't. If that's the takeaway here, that his three hypothetical black swans that are going to destroy gold is the asteroid, alchemy, and mining to the inner core based on AI automation. Like this is crazy talk.
yeah, and
Crazy
I
talk.
love how the person on the stand was like, oh, like giving it reverence, like, oh,
ooh, like
a gold asteroid, gold asteroid. Listen, I'll stick to the basic premise that we've been.
this sounds like a crypto geek that is upset that they didn't get their bid with gold.
I think it's exactly what it is, right? I think that's exactly what it is. And as a
Because he's
crypto
down
geek,
billions on his crypto play.
and so, yeah.
That is insane to me.
Yeah, I thought it was hilarious. Listen, I think we'll stick with the, what we've been talking about for gold.
Of the three, alchemy, mining to the inner core in the ocean, or the what was alchemy, mining, and the asteroid. Which one of them do you think has the highest probability?
You're asking me to choose which of the three crazy people walking down the street.
I can't believe he dared put that in an interview. I honestly can't.
Oh, yeah. We should be biased.
Insane.
We should be biased.
That's insane. That's insane. I'll go mining just because robotics will create mining operations, but that's just going to give people more gold to buy. I don't get it.
Oh, yeah,
wow, alchemy. Okay, maybe
Google,
I'm wrong.
Your future GDX. GDX will one day be Google and Meta.
I have. Hey, Tom, it's just easier to buy the gold miners, Tom. Like, it's just easier to do that than try to paint a bearish argument on alchemy, my friend. That is utterly insane to me. So good luck to Tom Lee, moving on from the trading justice perspective.
Yeah, good luck.
Give me more confidence in my technical read on gold somehow.
Yes, gold somehow shook off that analysis and broke out of resistance the last couple of days. Just before we get into tariffs, just to highlight some of the things coming up the rest of the week. We got the State of the Union on Tuesday night, NVIDIA, as we talked about Wednesday night. On Thursday, U.S.-Iran is going to be, the talks are going to expected to continue in Geneva on Thursday. And then Friday, we have PPI. So
of those, what's the most important to you?
The Geneva-Iran thing, just because I think it could be the most consequential outside of NVIDIA, of course. NVIDIA is obviously going to get.
Yeah, it's NVIDIA 1A through Z for me.
Yeah, it felt rhetorical on the NVIDIA part, right?
Yeah.
All right, let's talk tariffs. Listen, we are halfway, or even we're more than halfway through this podcast, and we haven't talked tariffs yet, which have stolen a ton of headlines in the last two trading sessions. On Friday, to catch you up to speed on Friday, in Learning Resources versus Trump, the Supreme Court struck down the tariffs imposed by the IEEPA, the International Emergency Economic Powers Act. These are the reciprocal tariffs, and as well as like the tariffs applied to Canada, China, and Mexico under the different emergency declarations. Trump has used the emergency declarations to basically, push through his tariff agenda. We all know about Trump's tariff agenda, and the Supreme Court said the method in which Trump was doing that in a 6-3 decision was unconstitutional, right? That the IEEPA, this Emergency Economic Powers Act, did not grant the authority to do that. Friday morning, the Supreme Court rules that. And what the court didn't decide, right, was a roadmap to refunds. We'll get into that. But what was, when you read and saw the headlines right off the bat on Friday, what was your initial take on the tariffs when the headline was?
I personally was not surprised at all. You and I have talked about this. We've talked about it on the pod, but out of all the Supreme Court cases that has the Trump administration in front of the Supreme Court, and there's quite a bit. There's quite a bit. But out of all the Supreme Court cases, the one that is settled, in my opinion, is taxation and tariffs. And you can debate whether or not. Personally, I don't think you can. Tariffs are a tax, but I have seen other people debate whether or not tariffs are a tax, and so on and so forth. And I'll let those people debate that. But to me, that answer has been clear for hundreds and hundreds and hundreds of years. And it's very clear in the United States Constitution who has the authority over taxation and tariffs, and that would be Article 1 powers. And so you have Article 1 powers, you have Article 2 powers, and you have Article 3 powers in the Constitution. Article 1 powers are congressional powers. Article 2 are executive branch powers, and Article 3 are judicial branch powers. And when it comes to tariffs, that is an Article 1 authority that has been broadened out to have the executive be able to handle the administration of taxation and tariffs in a simpler and easier way than having to go through the Congress, which, let's face it, we've had a do-nothing Congress for decades now. And so the administration and Congress have basically worked with one another, not this administration, but over time, to create regulations that the president can rely on to execute tariff authority outside of Article 1 powers. And so that's where you get into Section 122, 301, 232, 338 would be those regulations that allow the president to target a certain thing. But Mark, there is a fundamental difference between what the Liberation Day tariff plan was in terms of the universal adoption of that versus utilizing, say, a Section 122, for example. Trump, there's no time clause to what he was doing with tariffs before the Supreme Court ruled. It was open-ended, and that's why he could go to these countries, and these countries would be like, oh yeah, we have a trade negotiation, we're negotiating this is what the tariff is going to be, and he would use it in trade negotiations, he would use it in non-trade negotiations, he would use it as a sledgehammer to get his way from a geopolitical perspective. And even outside of geopolitics, he would use it as a way to get his way from a corporate perspective. Hey, you either do this or I'm going to put this tariff on, and the corporation would obviously succumb to that. And so, when you're looking at what he was doing from the execution of the tariff policy following Liberation Day to kind of what he has authorization to do today, they're a little bit of a different conversation. Even though the administration doesn't want to paint it that way, they're trying to paint it as they have authorization to do whatever they want. That's not what the Supreme Court said on Friday, and that's definitely going to be challenged in court. I don't see a scenario where the effective tariff rate does not go
Well,
down.
and let's get into that in a second. Let's get into that in a second. And so the Supreme Court rules, right? And you laid out the constitutional case very well. You laid out the Supreme Court, the constitutional case very well. But and it's been well known for this entire saga that there were other alternative methods that Trump could and the administration could use if the Supreme Court ruled against, right? Obviously the Emergency Powers Act gave him the broadest latitude to use it however he wanted, right? And basically he would use it however he wanted.
And I think that's what the Supreme Court came down and said, you can't
use it however you want, right?
And I think it goes beyond the tariffs. I think it goes to president's authorization to use emergency powers in the first place. You can't declare the emergency just to use whatever policy you want. And again, I'm not talking about the current administration on that. I'm talking about I have a concern as a conservative in general that presidents should not be able to both A, declare the emergency, and B, execute the
Yeah.
policy that is based on the emergency. That is working around checks and balances. That's the Congress is, or the Constitution is very clear on that. Work with Congress. And I loved what was it? It was one of the justices in the concurring opinion basically stated, and it looked like he was writing directly to the president, but mine is more policy driven, not to an individual. But it did read as Gorsuch writing to the president saying, and I'm paraphrasing here, you might not want to work with Congress, you might not like to work with Congress, but the Constitution is very clear that you need to work with Congress. And so I don't think there's a lot of debate there. Now, obviously, the administration has avenues they can go to pursue their tariff policy, but once again, not to the level that you could. And it's not as simple as just saying, we're going to put universal tariffs at 15%. Like you use Section 122 on that. Because when you look at the ways you can work around the universal adoption of tariffs, you have basically four regulations: 122, 301, 322, and 338, with the bulk of them under 122 and 301. And so 122 tariffs, for example, are the universal adoption of tariff that you can use in a variety of scenarios.
Which is what Trump has used since the Supreme Court ruling. That's the one.
And that's what I would have used too if I was Trump.
And that's what he immediately went to. He said, all right, for 150 days, I can raise tariffs up to 15%.
Well, because you don't have any investigations there. You don't have to work around any other
and
regulatory.
The act is pretty, you can just, for 150 days.
You got 150 days to do whatever you want there, but then you need congressional authorization. Now, and that's usually to fix some degree of trade imbalance. In Section 301 tariffs, why does the president use 301 tariffs?
Because in 301, so we have the immediate thing with the things that we've seen in the headlines the last couple of days. Trump raising tariffs 15%. That was the 122. Well, that caps at 15%. Section 301
and the 150 days.
And so it caps both at 15% and 150 days. Well, 301, which allows you to have much higher duty levels and has no automatic expiration. So that allows you to expand both in magnitude and in length.
It's a rigorous investigation.
But it is not something that you can just snap your fingers. There is a process, if done right, can not only take months, but years, right? A lot of estimates that a lot of 301 initial investigations, and let's be honest, it might happen to China, it might happen to Brazil, but it is not going to happen to every country. They're not going to open up a 301 investigation on every country out there.
And I doubt if they're because those 301s, every single aspect of a 301 tariff is going to be challenged in court, and they're going to have to prove it out. And that's going to be difficult. You don't have to do that on Section 122. You have a lot of universal authorization using Section 122, but you have the two regulations in that, 150 days and 15% cap. 301 allows you to offset that. But Mark, would you agree that regardless of how creative they want to get on the working around the Supreme Court ruling, that the effective tariff rate goes down over time?
And this is the market question, right? We've known there's been tariffs, right? Yeah. We've had headlines over the last 3-4 days, and the market was down on a Monday, and a lot of financial media is like tariff chaos. And there is a little bit of chaos because we don't know exactly the path in which things will take. But one of the reasons that I am prone to think of this as more noise than maybe substance as far as causing anything other than, and we've had to deal with headline tariff disruptions, is the fact that the effective tariff rate, the overall tariffs that are paid, is what the effective tariff rate will be lower, right? It's almost impossible. In fact, the Yale Budget Lab estimated that will be lower. Morgan Stanley, Goldman Sachs, both coming out over the last 24 to 36 hours, saying the effective tariff rate will be lower.
I
It is
think in general, you'll see probably 3 percentage points lower over the next 6 months. And I think over the next year, you'll probably see about 6 to 9 percentage points over the next
because
year.
you just can't effectively, and this is
Yeah.
not even counting after 150 days, what happens to those 122 tariffs, the ones that were put on the ones that.
They're going to try to do them in Section 301, but again, you're going to have to
But once again, you're
be
not going
very
to do that
rigorous.
on every country, right?
And
You're
if you
not going
tried to do that on every country, you're going to lose court cases on every country because there will be no strategic execution. The courts will see that as a broad general interpretation, and they'll shut it down. So, like to me, it's like I don't really get into the political arguments here because they'll never stop. To me, it's about that effective tariff rate. Like we can look at every company in the S&P 500 and talk about every single EPS beat and the percentage of every, or you can just look at blended EPS growth. Do I want to look at every single trade agreement that has been discussed over the last year and see how that's going to play out on absolutely everything, or should I just care about the effective tariff rate?
You should just care about the effective tariff rate,
That's kind
right?
of where my head's at.
And there, I mean, and one of the things is we're in the initial days of this chaos, right? Where the headlines, Trump raises to 15%. European Union balks at their trade agreement. Trump threatens
India boxes, yeah.
Yeah, Trump says you better not, or I'll raise tariffs even higher, right? And so we're
You're
in
just
the
like,
first,
how
yeah.
are you going to do that?
So we're in the first couple days
Yeah.
of the
Trump's trying to paint
disruption.
this as aggressively as he can as a win. And that's the saga we're in right now. And the market's like, can we just fast forward a little bit?
But it is hard, and this is one of the reasons I guess I have a hard time seeing this as substantive. Like I see it as noisy. I see it as chaos. I
Okay.
see it as political theater.
I do as well right now, but can I ask you a really simple question? As we work a little bit further, okay, because we're having primary season right now, Mark. We're going to have primaries all across the United States in who's going to really run in the midterms, okay? We're having primary season right now. As we get into the general election season of the midterms, do you think Trump's going to have the same degree of appetite to fight for tariffs?
No,
Because that will be in every headline every day on affordability.
Yeah, no, it is not, and it is not a winning political issue.
I'm already seeing Republicans run from the messaging.
Yeah, it doesn't net votes. And so Trump gets his tariffs, his emergency powers, which he used, at times very effectively to negotiate just about anything.
So I remember he walks back this a little bit over time without actually being like it's a lot of big right now. But my point is, do you think he's really fighting for this plan in 2 months from now?
Yeah, no, I do not. And so there's
or,
three
or in
reasons.
5 months when the Section 122 tariffs go out. Do you really think he's going to want to get way aggressive 2 months in front of the midterms on affordability?
No, of course not. And so there's three reasons. There's three reasons that I walk away from this as a net bullish, not just not bearish. Yeah. One, I can't see Trump carrying it through politically. Two, the effective tariff rate has to go down. Like it has to go down. You are going to have fewer tariffs, no matter how creative they are with sector tariffs, no matter how creative they are with 301 investigations, no matter what they try to do with 122, the effective tariff rate will go down.
Yeah.
And so, I see it as a lot of noise, and chaos, but I don't see it as a sustainable.
I just see that like right now. Like, I don't think this is a conversation that sticks the same way it did last year for 9 straight months. Like, I feel like, we're dealing with a big up on Friday and a big down on Monday, but we really haven't done anything. We haven't really broken anything. The market's like a stone throw away from where when the Supreme Court ruled on Friday. So I kind of feel like the president's trying his best to paint this as a win for him. But over time, I do think he comes off that aggressive stance because, quite frankly, I don't think you want to debate that after you just lost at the Supreme Court going into the heart of a midterm election, where if you don't get those polling numbers turned around, you're going to have a heck of a lot more things to worry about next year as the Democrats go through impeachment hearing after impeachment hearing.
Oh, it will be a lineup.
They've already stated it, so
That's
let's
right.
not be surprised when they do it.
All right, let's finish out the pod with any other last
Yeah.
thoughts on tariffs.
No, I appreciate the conversation. It's a little bit of fog in that war right now, and so I'm glad you and I kind of have the same take on it. That it's a very sensitive part of the conversation today, but the most likely scenario is this slows down over time, and both of us see the effective tariff rate
let's
going
be
down.
honest. The unpredictability of Trump throwing out a tariff tweet, I believe, went down. Like, that kind of wild card.
Maybe after the let's let the 72.
Oh no, not for the next few days.
Yeah,
No,
let's
pissed
give the
off.
president 72 hours on
Yeah,
that.
he's pissed off right now. He's
He's upset right now.
I mean, he rose him to 10, and then someone told him he could raise him to 15.
I kind of I know this might be a little surprising. I kind of feel like the Supreme Court gave him a little bit of a gift.
I don't disagree with that, right?
Yeah.
I don't disagree with that, but
I would
all
play
right.
it a little differently politically right now, but I do think they gave him a little bit of a gift going into an election year. I saw latest polls on tariffs, and 2/3 of America disagree with the tariff policy.
All right, so let's do a quick stock it or drop it real quick.
Yeah.
Listen, I want to start with Tesla. I had a video clip from Webbush, Dan Ives. Do you have that video clip?
I do. You sent it to me. I definitely do.
I thought he laid out the case for Tesla, and Dan is a uber Tesla bull. He tends to be uber bull in general on technology, but I thought he laid out a pretty interesting case here. Let's play the first minute.
Yeah.
And then I'll sort of delve into this more. Tesla 600. It's not a car story. Do you see 800? Do you see 1,000? Would that be crazy or no? I mean, that's where it's headed.
Base case 600, bull case 800. I mean, to me, when it comes to Tesla, that's one like this is the most important year I'd say for Musk maybe ever because of autonomous, because of robotics, because of where they're heading down this AI path. I mean, to some extent, it's an extremely important time for Tesla. Because look, there's obviously competition across the board. Some could argue NVIDIA doesn't, but I just believe when it comes to the autonomous world, they're going to own 80% of the market when it's all said and done. But 30 cities you need robotaxis this year. It's integral, in terms of the Tesla story.
Yeah, I mean, I know they started in Austin, and that was one of the reasons why.
All right. The shift, the pivot, the most important year in Tesla ever. Little hyperbole there, or is it?
I don't know if it's the most important, but it is certainly up there. I don't disagree with Dan that much on that one. You're pivoting your legacy car manufacturing business, which was built on government credit programs, of which you no longer receive nearly as much, to pivoting into robotics. I think the decision is controversial out of Elon. I also think that's what leadership does, is they make the tough call in the right moment. And I think this is a very, very tough call. I guarantee Elon had many, many, many sleepless nights on before they ultimately made the announcement to pivot to robotics 3 weeks ago. But I personally think it's the wise choice. I agree with Dan that I don't think there's another company in a better position to take advantage of the automation that AI brings than Tesla is. They already have the conveyor belt, they already have the technology, and now it's just a matter of perfecting both the tech stack and the process. And so I think smart people will pivot here, and the smart people from the digital AI side to the hardware AI side, and I think Elon's one of those smart people. So I actually think the pivot was a very good decision out of Elon and Tesla. I think that's the future of where this goes, is AI, robotics, and automation. And even though Tesla was already a technology company, in my opinion, before the pivot, it's good to see It's good to see OC and BC agree that Tesla is now a technology company and not just a car manufacturer. But I agree. I think from a targeting perspective, I don't get into that game of
Yeah.
fundamentally targeting where something will go. I do find it curious that he said 600, which represents a 30% markup against price, is not a bull case. Like I thought that was interesting. Hey, my base case is 600 and my bull case is 800. So wait a second. So your base case is
And that was
30%
for
appreciation,
2026.
and your bull case is double? Like,
is
okay.
double.
I think the moon. I think the moon is a target here on Tesla longer term, and I don't think it's outlandish to say Elon could corner 80% of the robotics and automation environment. Like, I don't think that's a crazy thing to say. Elon, if we recall, just last year signed a compensation plan to, if Tesla gets between $8 and $10 trillion, he gets a trillion out of income out of that. So I don't think he eventually gets that in the next 10, but I certainly think he sniffs closer to it than where he is today. So I'm going to go ahead and stock it. I think Elon's a visionary. I want to see this one play out, and I have more confidence in Tesla than I do Bitcoin.
I can't disagree with that these days, although I still have faith in Bitcoin. Well, but that's a subject for another day.
Listen, I saw people finally
Listen,
embracing
there are no Bitcoin asteroids out there, Matt.
Are we sure? Are we
There
sure?
are no Bitcoin
Maybe we need to call up
asteroids.
Tom Lee to see if he'll give us some deep dive
Elon will
research
not
on that one.
find a Bitcoin asteroid hanging out there.
Oh, Lord Almighty. The Bitcoin people are rotating to the digital gold argument. They're like, if there's one argument that's going to put a stopgap into this sell-off, it's going to be the store of value. I'm like, are you serious? Like, okay.
All right, let's go to Google next. Wells Fargo upgrading to overweight. Google citing Alphabet's AI and infrastructure strength is the rationale, targeting 387. Stock it or drop it, Google, man.
387 with the 320 print, and they got overweight?
Yep.
You're going to talk targets here.
Well, I mean, we can't all be Dan Ives, doubling.
That's true. That's true. The only concern I have on Google is technically, like that's really the only concern I have. I didn't feel they had a negative earnings report. I just have some concern technically here, and I can't not see head and shoulder developments. And so I'm not going to drop it because like I just don't think it should be like overweight to 370. I think we got to navigate this technically, and I love Google. It's on a lot of my list, and I'm not going to take it off. But I do have some concern about the current head and shoulders formation right now.
Walmart reported earnings last week. Beat on revenue, e-commerce growth, launched a 30 billion buyback, but had some guidance that was disappointed. Stock it or drop it. The no longer biggest retailer by revenue in the world, right?
No, they got surpassed slightly by Amazon, but let's not feel too bad for the 190 billion print that Walmart did last week. I'm not too concerned about Walmart. Walmart's the biggest retailer out there. It's the number one consumer brand out there. I think this is more about understanding where support gets built than anything else. I'll stock it.
All right. This one's me from a thing. It was removed from Pan W. Pan W. Really beat up down near the 200 weekly. Atrocious chart has been started to remove from best ideas, such as Webbushes, who's double on Tesla, but removed it from its best ideas list, reflecting price discipline, i.e., technicals, despite strong fundamentals. They say. Stock it or drop it.
I kicked it off the AI gold rush last week, so I don't disagree.
Oh,
with
did
that.
you? I didn't catch that.
Yeah, I did. It got removed from tier 3. There's only one cybersecurity company on the list. It's CrowdStrike as of right now. I removed both ZS and PanW, so I'm going to go ahead and agree with that and drop it. I have concern on the cybersecurity side of it, and yes, it is chiefly among the financial services, software, cybersecurity. AI is coming. AI is not coming. AI is here.
Let's give me XLF. I wasn't going to bring this up, but like I know that you have been for 2 weeks now. Been like, I mean, is this space even touchable right now?
Yeah, on the short side.
Spoken like a trader. Spoken like a trader.
By the way, it had its own head and shoulders formation recently. But yeah, this is now 2 consecutive lower highs, and now you're breaking support. I'm going to tell you right now, I don't think 50 is the low point here.
Finish with a sentimental favorite of mine, Chewy. Got an upgrade. Price has not been responding, but Raymond James upgraded, basically saying, hey, the recent weakness has created an attractive risk reward setup. It's been about a 50% clip. Stock or drop, but Chewy.
You're begging. Not you. They are. This is a bearish downtrend with momentum with the bear flag. Should get some more sell bid coming into earnings. I would say if you had that conversation at 20, I might agree with you at 25 against a bearish downtrend with increasing momentum to the downside. I certainly don't. So I'm gonna drop this one.
And there's your trader. And well, Matt, we covered a lot. We
a
covered
lot to cover in the market right now.
I think it's the first time we've ever covered alchemy in the Trading Justice podcast. So we haven't
had anybody smart enough like Tom Lee to tell us that they're going to start building gold in a laboratory, and it's going to go down to zero. And you couple that with gold going to zero, you couple that with all demand going down to zero based on that AI speculation. I mean, my goodness, there's a lot of zero in the news with old Tom Lee's gold prediction and whatever the Citrine's AI projections.
Citrine research.
Wow. All the bear porn that anybody could handle there, I would say.
I mean, Tariff was
Tariff what?
Tariff is just tariffs. Effective tariff rate go down. All right, send us out, brother.
Yeah, if you love the podcast, best way to support the podcast is give it a nice little like and share. Make a comment. We love our community at Tackle Trading. And if you are looking for a community to call home that you can grow with, learn from, and do everything you do as a trader, we put the education and the application together at Tackle Trading. We #1 rated financial education company in America, according to Trustpilot, because we work with our community until they don't need us, basically. And then on the application side of it, we meet with our community every single day, navigating the financial world together in the Traders Lounge. We do the Futures Open Stream on Sunday, Coaches Shows, Cash Flow Club on Tuesday and Thursday. More streams and more content than you know what to do with, but we love hanging out with our community. So if you want to be a part of that community, hit that link in the description, sign up for a pro free trial, and you can get 15 days free on Tackle Trading. And if you love it, stick around. If you don't, no harm, no foul. With that said, I hope everybody has a blessed and wonderful week. And if you need us for absolutely anything, hit us up at team@tackletrading.com or hit us up in Discord. And with that said, have a great rest of your day.
All right. Have a great week, everyone.